You have read the books, you know the patterns, you understand market structure, liquidity, and risk management. You can look at a chart after the fact and explain exactly why the market moved the way it did. Yet, month after month, you look at your account balance and you are still exactly where you started. Or worse, you are slowly bleeding out. You think you are missing a piece of technical knowledge. You think the top 10% of traders have a secret indicator, a hidden algorithmic strategy, or a better understanding of price action. They do not. The difference between the 90% who consistently lose money and the 10% who quietly extract wealth has absolutely nothing to do with what is on the screen. It has everything to do with what is happening inside your head. You are trying to solve a psychological problem with a technical solution, and until you realize that, you will remain trapped. Let us start with the most dangerous illusion in trading. You approach the market seeking excitement. You want to feel productive. You think that because you are staring at a chart for 8 hours, you are working. But the market does not reward your effort. It does not pay you for your screen time. When you stare at the 5-minute chart waiting for something to happen, your brain is actually hunting for dopamine. You see a candle spike, your heart rate increases, and you take a trade that meets only half your criteria. You do this because the pain of sitting there doing nothing is worse than the fear of losing money. The top 10% operate in a completely different reality. To them, trading is profoundly, deeply boring, and they protect that boredom with their lives. Because excitement in trading is a massive warning sign. Excitement means your emotions are involved, your amygdala is lighting up, and your prefrontal cortex, the part of your brain that executes logic and long-term planning, is shutting down. If your trading is exciting, you are gambling. The professionals have mastered the art of doing nothing. They wait for their specific setup, and if it does not appear, they close the laptop and walk away without a single drop of regret. They know that boredom is where the money is made. Then there is the trap of certainty. Your brain is a prediction machine. It evolved over millions of years to hate uncertainty, because in the wild, not knowing what happens next meant danger. So when you trade, you desperately want to know if the setup will work. You add 5 indicators, you check 3 different time frames, you read the news. You are trying to analyze your way out of uncertainty. Meet Alex. Alex has a strategy with a 65% win rate, but when a perfect setup appears, he freezes. He wants to be absolutely sure it will not be one of the 35% that fail. By the time he feels certain enough to enter, the move is already gone. Or worse, he forces a bad trade because he suddenly feels certain, only to watch it instantly reverse. The top 10% do not seek certainty. They trust probability. They know that predicting the outcome of any single trade is mathematically impossible. They look at a setup and ask one simple question: does this match my edge? If the answer is yes, they execute. They don't care if this specific trade wins or loses. They know that over a series of 100 trades, the math will work in their favor. They have grieved and accepted the loss before they even click buy. Because they accept the uncertainty, they experience no hesitation on entry and no panic when the trade moves against them. But accepting that loss is impossible if you are making the deadliest mistake of the amateur trader: position sizing. You think risking more will get you to your financial freedom faster. You want the big win to prove you're right. But what you are actually doing is destroying your psychological stability. When you risk 5 or 10% of your account on a single trade, you are no longer trading the market. You are trading your fear. Price moves against you by a few pips, and your nervous system detects a physical threat. You panic. You move your stop loss to avoid the unbearable pain of being wrong. You cut your winners early because you are terrified the market will take your fragile profit back. The top 10% risk an amount so small that it feels almost meaningless, 1% or less. When they lose, it is a minor business expense, an annoyance, not a tragedy. Because the position is small, they can breathe, they can think clearly. They can watch the price hit their stop loss and feel absolutely nothing. They optimize for long-term survival, not for the short-term home run. Because in this game, the person who survives the longest is the one who ends up with all the money. There is an even deeper truth that keeps you stuck. The reason you keep self-sabotaging right when you start making progress is because your identity is tied to being a struggling trader. You have an identity ceiling. You build your account up for 3 weeks, you follow your rules, you feel like you finally figured it out. And then, in one afternoon, you take a revenge trade, double your size, and blow it all. You blame the market. You blame a sudden news event. But the market did not do that to you. Your brain did. Your brain saw that you were succeeding and panicked because success requires immense responsibility. If you become a consistently profitable trader, you can no longer make excuses. You can no longer play the safe role of the student who is just figuring things out. You have to show up as a disciplined professional every single day, and your subconscious finds that terrifying, so it pulls you back down to familiar failure. To break into the top 10%, the old version of you has to die. The version that needs to be right must die. The version that trades to escape boredom must die. The version that attaches its self-worth to a green or red number on a screen must be completely destroyed. You must also embrace the discipline of silence. The 90% love to broadcast themselves. They post their winning trades on social media. They complain about their losses in chat rooms. They constantly seek validation from the crowd. The top 10% operate in total isolation. They do not brag. They do not explain their setups to anyone. They know that when you talk about your trades, you are leaking mental energy and tying your ego to the outcome. If you tell everyone you are taking a long position, you will refuse to cut the loss when it goes against you because you don't want to look stupid in front of others. The professionals protect their mental space like a fortress. They compete only with yesterday's version of themselves. Becoming a top 10% trader is not about adding complexity to your charts. It's about stripping the complexity away from your mind. It's the quiet, unglamorous, repetitive process of executing your edge without emotion. It's seeing your setup, accepting the predefined risk, placing the trade, and walking away. You are not fighting the algorithms. You are not fighting the institutional money. You are fighting your own primitive instincts. You already have the strategy. You already have the knowledge. Now you must build the mind. Stop chasing excitement. Stop running from boredom. Accept the uncertainty. Shrink your risk until you feel nothing, and let the math do the heavy lifting over time. The exact moment you stop trying to beat the market and start mastering yourself is the moment you cross the line. The top 10% is waiting for you. All you have to do is let go of the trader you are right now.